Greetings, my name is Ted Hicks. I'm the founder, CEO, and Chief Investment Officer for Hicks Associates Wealth Management. Today is Wednesday, May 24th, 2023, and in our last video, we talked about a big problem for the United States economy. That problem specifically is the fact that the interest payments on our nation's debt is now equivalent to our nation's defense spending. That chart is on the screen. So this problem is a direct result of the amount of debt that we have as a nation. Yes, the interest payments on our nation's debt has risen because of the rise in interest rates. That's certainly true, but it would not be a problem if we didn't have so much debt. Now, on the screen now is our nation's debt as a percentage of gross domestic product. So on the far right side of the screen, you see 120. That means that our nation's debt is 120% of our nation's economy. That is way too high. So we're not going to talk about the politics of this because, quite frankly, this is a bipartisan problem, number one. Number two, that's not my job. My job today is to talk a little bit about the last time that this happened and to hopefully calm some fears and some anxieties about what might happen. And if you're a client of ours, what are we doing about it? So let's start looking at that. Here we have the S&P 500. This is through Tuesday, May 23rd of this year. And let's zoom in so you can really see the price action from yesterday, Tuesday, May 23rd, right here. So has the market come in a little bit? Yes. Is the market down a little bit more today? Yes, it is. It's right in this range, right in here. So the market has not collapsed, so we certainly should not be panicking in terms of that. But what we want to do is we want to zoom back out and look, when was the last time that we had a debt ceiling crisis, if you will, and in particular when the government actually did shut down. So the last time that this happened was at the tail end of 2018, and that's what we're looking at right now. On the S&P 500, we're going to zoom in to when this actually transpired, and we can see that I've marked the candle where the government shut down on Friday, December 22nd, 2018. After that point, the stock market fell about 3%. You can see that here. Then this is the day after Christmas. The market had a very strong rally the day after Christmas. And until the government reopened on January 25th, the stock market rallied strong. The market rallied about 10% while the government was shut down. So recent history would suggest that the stock market actually rallied during the government shutdown. But that's not really the concern. That's not really what's driving some people to have some anxiety about this in terms of the stock market. This is the period that has people a little bit concerned. So let's look at that. In particular, I want to know what happened on that particular day. Well, that was Tuesday, December 4th, and a simple internet search will tell us that the U.S. stock market fell on renewed fears of trade wars and an economic slowdown. So the stock market did not fall on this day due to the debt ceiling crisis that was then unfolding. We now see a little bit of a floor in here. I want to highlight that, and then we'll find out that a little internet search, I looked for each one of these days. On Tuesday, December 11th, President Trump says he would be proud to shut down the government. That's this day right here. Market was down that day, and it just cascaded down. So from that day to the bottom, it was approximately a 12% correction. So the last time that this happened, at the tail end of 2018, the stock market actually rallied while the government was shut down. And it is important to note that the 2018 shutdown was the longest government shutdown in U.S. history. Yes, this has happened multiple times over our nation's history, but 2018 was the longest time period where the United States government was actually shut down. But during that time period, the stock market actually rallied. But what happened around the world? Well, now on the screen, I've got 4 ways of looking at that. Again, I've got the S&P 500. During this time period, the S&P 500 was basically flat. Okay, so from December 10th, 2018 to January 26, 2019, before and after that event, the S&P 500 was basically flat. The NASDAQ, I've got the QQQ as an ETF, was up actually 1.28% during that time period. Then we've got VEA, which is a Vanguard International Fund. So this is one of the ways that we're looking at how did the international market do. That was positive during that time period, 3.5%. And then emerging markets during that time period was up almost 7.5%. So as I wrap up this video, I want to highlight the fact that the 2018 government shutdown was the longest government shutdown in U.S. history. And during that shutdown, the stock market actually rallied. Yes, the stock market did drop leading up to that government shutdown, but then the stock market recovered. So that from the beginning to the end of that time period, it was as if the stock market had no change. That is certainly no guarantee that the same thing is going to happen this time around. But we would encourage you, do not panic, do not overreact. If you are a client of ours, know that we continue to follow our multi-strategy investment discipline. To that end, we did follow our rules yesterday and took off one of our largest positions to protect a gain. So if you are not a client of ours and you want to learn more about how we manage money for our clients, by all means, feel free to reach out to us. You can find our contact information at hicks-associates.com. The final thing that I will say for today is that history also would tell us that the stock market tends to rally when we have a point of maximum pessimism. On the screen right now from the American Association of Individual Investors is a snapshot from their website talking about their sentiment survey. And their recent sentiment survey is showing that optimism is below average for the 14th consecutive week. That is a nice way of saying that pessimism is at a very high level. So hang in there. Pessimism is so high that we might be at that turn. If you have any questions, feel free to reach out to us. We thank you for watching. We certainly hope this helped.